Yes, good morning, friends. So today we are going to do a presentation on Mahindra Holidays and Resorts Limited, and it's a mispriced bet. Is or is it not a mispriced bet? So this is what is to be seen. And the presenter is Mr. Ankit Kanodia. Ankit ji is an MBA from XIMB Bhubaneswar with 10 years, over 10 years of experience in research and investing in the Indian stock market. He is a partner, investment advisor, and co-founder of SmartSync Services and a SEBI registered investment advisory firm. Now, in the past, he has worked as an equity research analyst for Eureka Stock and Share Broking Services Limited, based out of Calcutta. And he is also famous for his Safal Niveshak investment competition ideas. So, I would not like to take any other a lot of time, and I would like to give the mic directly to Ankit Bhai, because if I start talking about Ankit Bhai, there's a lot of things that we can talk about him, from his 5-minute ideas to Mission Smile. So, Ankit Bhai, I'm giving it over directly to you.
Thank you so much, Ayush Bhai, for such a good introduction. First of all, good morning, everyone. Thanks so much for registering and showing up on a Sunday. And first of all, we hope all your family members are keeping safe in this pandemic. Without taking too much time, we just start with the disclaimer now. This is a company where I am personally invested, we, our team are invested, and we have recommended this stock to our investors. So it is natural to believe that our analysis could be biased, and this is not a recommendation. Plus, it is more of a contra bet as of now. So there can be, if situations turn, if there are some changes in circumstances of businesses, or maybe if the pandemic goes on for a elongated period, say for about 2 years, and travel remains like that, we may change our stance, and we may not be able to come on. We may not be able to inform you like the way we are informing you right now. So take that disclaimer with you before we start analyzing this business. So Akhilesh, you are having the screen, right? So this is an idea where we have basically our team, Akhilesh, my partner and co-founder, is already there with us. And we are right now very bullish on this idea. And together we think we'll be able to give you some insights which is not generally available in the public domain today. So hope you will enjoy this session. We can start, Akhilesh, from here. So as you can see, MHRIL share price performance over the last 10 years. So clearly, the business is not being favored by the investment community. In the subsequent slides, we will go into detail why this has happened, what has happened, what wrong did the company do, which had led to the share price performance. But whatever we see in the past share price performance doesn't say anything about the future. There is a chance that the company's share price continue to be like this, and there is a chance that the company's share price can do really well over the long period of time from here on. So there have been umpteen examples where companies have not done well. The share price have not done well for 10 years, even for great companies like HUL, and that is happening with ITC for the last 4-5 years as well. But then again, for the next 10 years or next 5 years, those companies perform well. So that happens even more for smaller companies, lesser known companies. So over the subsequent slides, we'll take up that. Next slide, please, Dada. So I'll not read out everything. You can probably read, and we'll share the presentation. But what we want to draw to your attention is airline industry post the 9/11 crisis. Many of you would have seen the crisis, and if you remember what were the headlines, what we were thinking so like we have COVID and we know that travel is not happening. Similarly, the same scenario was there in the 9/11 crisis. people were thinking that airlines and air travel, specifically foreign air travel, will take a big hit, and it will take a lot of time before they come back to normal. Now, what happened in that period is that even though it took a couple of years for the industry to come back to its pre 9/11 level, but the but the but the but the velocity with which tourists started traveling from the lowest time, like if you can see in this presentation, during Jan 2001 to Jan 2002, during that period, that was the height of the crisis. And from there, it just shot up. And that is where, when the extreme pessimism is there in the market regarding an industry, that is at that point of time, there are some companies, some businesses, which becomes really attractive to look at, because those businesses may have some near-term problem and uncertainty, which we don't know how much time it will take. But they have the balance sheet, they have the business model, or you can say they have the capacity to suffer these tough times. And whenever the time comes, which we cannot project today, and because there is the uncertainty, that is what is being captured in the price, in the valuation. So even if you look at the last 1 year price performance of Mahindra Holiday, it went down to as low as 120, 130, something like that. And then from there, it doubled in no time, right? So that is what is being, that is what we want to project over here, that there is no denying the fact that travel is an industry which is taking a hit a lot at this point of time. Next slide, please, Dada. So what does this history tells us? Just look at these two pictures. I think pictures are, it is rightly said that a picture is worth 1,000 words. Just see what happened during this pandemic. The first, the left side picture is 8 March 2020. And then the second, the right side picture is 8 March 2020, 28 March 2020. That is only 20 days difference. And just look at how many flights were traveling all over the world just 20 days before, and what happened after 20 days. And that is how COVID hit. And probably travel is one of the most hit sector of all the sectors, at least in the listed sector, listed space. That is where, and when these kind of things happen to a sector, of course, the sector performs poorly. I'm talking about poor, not just the price performance, I'm talking about the operational performance of those businesses. Travel and travel related businesses will not do well in terms of the profitability. But this is probably one of the best times to look at companies and businesses. We are not saying just MHRIL is that business. There can be other businesses also. But we have to look at businesses where balance sheet is strong and where business model is strong. And we can project that maybe 2 years, 3 years, 4 years out. We know that this company is not going to go bust, and it has the firepower in its balance sheet where it can continue to perform well over the long term. Next slide, please. So what has been the lessons for travel and tourism industry in this last 1 year? So industry, obviously, it has been hit hard. It may cause bankruptcy in the sector. So one thing good happened with the travel sector is that travel sector was already bleeding in the period just before the crisis. If you remember, Thomas Cook UK, which was earlier the promoter of Thomas Cook Indian company, later on Prem Vatsar, the Canadian investor, he took over the company of Thomas Cook. But Thomas Cook UK, which was a far larger organization, that collapsed in 2019. Then we had our Indian example in Cox and King, which went bust. So travel industry was already suffering through a lot of pain prior to COVID. And then probably COVID was the last nail in the coffin, wherein even whatever left was done, and then you got a bigger hit. So what has happened? So demand slowdown obviously may cause bankruptcy in the sector. We don't know how long it will play. And one thing which is very clear is this industry cannot go extinct. And that is very much evident in the period September 2020 till early March 2021. If you look at the travel data during that, and you know about people, you don't even have to look at data. You just talk to people around you. And I am pretty much sure that all the participants, many of our participants also went for a holiday, short holiday maybe, during that period, right? So that is something what this industry has. It will not go extinct, as demand of travel and leisure is ingrained in human psyche, right? And obviously, right now people may hesitate, but eventually this is a demand which is only going to go up going ahead. Next slide, please, Dara. We can skip this one after this. This prevent burnout by taking breaks. 3 out of 4 executives believe that travel is important. So why this is a contrarian? Why this is a contra bet? And let me spend some time just explaining why. So whatever is written in the presentation you can see, but let me share 3-4 more points beyond the presentation, which is a contrarian bet is always tempting. It always looks tempting. Why it looks tempting? Because it is always a high risk and high reward bet. Why high risk? Because there are so many uncertainties which is prevailing today where we have no control. Today, sitting here, attending this webinar, we have no idea how long this COVID period can go. Just a hypothetical case, if this if this COVID situation, however, we as a company, Smart Sync Services, believe that and hope that this should not happen as a society, for the society. But if this, God forbid, if something like this happens, that it continues for a year or two, it is for certain that travel will not do well. That is the time when you have to probably cut your loss. You might invest today and the stock price may be 50% down, but then the situation is not going to change very soon. When you see that, you have to probably cut your loss. But why we feel that kind of a probability is much less today, we'll cover in the subsequent slide. So what are Contra Investing's major points? Number 1, it is a high risk, high reward bet. Number 2, prepare to wait for the things to turn well. Don't invest a lot of your portfolio into it. So you should start with a lower allocation. See, last year, August or September, we did a webinar on Tata Consumer. And there we basically explained how we started with a 2% bet in Tata Consumer in 2017, where we thought that this is a company where there could be some change happening. We were not very clear and not very sure that the change will happen in 2018 or 19 or 20. But we thought that this is a company worth buying, where change can happen because the management was changing and there was something good happening with the company. Same thing we are expecting here as well, but all the time things may not work. What worked there may not work here. So that is where we should not become confident and start with a high allocation today, because it is still a contra bet, right? And we should always be willing to sell a contra bet when we know that our thesis was wrong. So even today, even though we are very confident on this, our thesis is still a probabilistic bet. If it doesn't work, we should be willing to sell it off at a loss. Next slide, please. So what does vacation ownership mean? So vacation ownership is a system where a customer pays a lump sum amount in the beginning to enjoy vacations over a long period of time with a choice of many locations where the vacation ownership company has its properties, right? What are the different types of vacation ownership? One is fixed resort, fixed week. The other is point system. The third one is deeded sale. So this point system and deeded sale these type of vacation ownership are not very prevalent in India. It is there in other parts of the world, but there also it is not so prevalent right now. In most of the what do you say, advanced countries like US and UK, they have a fixed resort, fixed week concept, wherein you have 1 week fixed for one particular resort for a year. So say for example, there is a property in Goa, property named A, and you are a vacation ownership member there. I'm talking about not of India, I'm talking about the concept which is prevalent in US and UK. You can go into that particular resort for a week, for in 1 year you can spend one fixed week in that resort. That is what you get. But things are not exactly the same in case of Club Mahindra. We'll cover that in the next slide. Next slide, please, Dara. So what is the model of Club Mahindra? In case of Club Mahindra, the year is divided into 4 seasons. There are 4 seasons, and in all seasons you don't get the same kind of demand. So there is a time when there are, say for example, summer is a season where people look for holiday because kids have their schools closed. So of course, right now we are in a pandemic, that's a different thing. But generally we will always have more people going out in summer season, right? Then during the end of the calendar year, again, that's a festive season and people travel a lot during that time as well, right? Second point, the resort is divided into studio, 1 BHK, 2 BHK apartments. So there are 3 types of, so 1 BHK and 2 BHK apartment are really large and expensive, right? And in case of Mahindra Holiday, you also have an option of studio. So if you have a very small family of say 1 couple and 2 kids, even a studio apartment does really well for you. And the cost of a studio membership is far lower than what is the cost of this one, 1 BHK and 2 BHKs. The third point is members are entitled for 1 week vacation in a year. And over here, the most important part is the last point, which is customers can choose the apartments and the season they want to holiday in. And holiday membership is charged accordingly. So based on which season you are choosing and which resort you are choosing, you will be charged your membership accordingly, because what happens is that you get a specific number of points to burn every year. So based on which resort and at which season you are going, you get to you are charged accordingly those points, right? Next slide, please. Before I move ahead, I also wanted to make some point that you can write down all your questions in the chat and we'll take up after the presentation. Okay. So what is the business model of Club Mahindra? So the vacation ownership company, Mahindra Holidays, it sells 25 years of membership. Recently, it has also started a 10-year and a 3-year program. We'll cover that later. And customer can pay the entire amount upfront, or there is an option of an EMI. EMI also has a interest component, which again is an additional source of income for Club Mahindra. And the company not only earns through vacation ownership, it earns a lot through resort income, because if I am a member, hypothetically speaking, if I am a member of Club Mahindra, and if I take a membership, I go to the resort of Club Mahindra, there is a higher chance that I will have my I'll spend in the resort on F&B, as in food and beverages and other holiday activity. You might say that Indians are very miser and people evaluate There are options outside the resort, but they have strategically prepared. They have most of their resorts outside the in the outskirt of the cities, wherein just outside the resort you will hardly find some opportunities like that. And most of the vacation ownership customers, I've gone to a few resorts. I'm not a member. Let me give that disclaimer. But I've used someone else's membership and I've visited 3 good resorts of Club Mahindra, and I've seen, even though they are all those holiday activities and their meals are exorbitantly priced. Like a breakfast is priced at 1,000 per person, but still you see a jam-packed restaurant of Club Mahindra, because people enjoy there. Those people who are there, they don't want to spend time figuring out which restaurant they can go 10 kilometers or 15 kilometers or maybe 20 kilometers from the resort and then have that. That is where they end up having a good time in the resort itself. So that is the main crux of this business model. So you get an upfront customer payment, wherein you don't have to, like any other hotel company, you don't have to raise debt on your books. Your customer is paying the entire upfront amount, which you can use in resort creation, building the inventory of rooms, and later on your operations of resorts are also being managed by the annual subscription fee, which they charge to all the members. Next slide, please. So these 3 products they have. So Club Mahindra 25-year is their flagship product, with which they started in 1996. Bliss and GoJust are the recent products. So Bliss is focusing more on the people who are having. It started as it is basically for senior citizens, people who do not have a horizon of more than 10 years when they plan for anything, right? So for them, selling a 25-year product doesn't make sense. Then there are millennials who do not want to tie up with any product for such a long period. So they want some flexibility. So that is keeping that in mind, they have recently started with GoZest as well. And if you look at the recent last 1 year or 2 year, if you do some calculation of how much revenue they have earned through new members and how many new members have been added, you will get an idea that more members have come from this smaller time product, the GoZest and Bliss. Next slide, please, Doug. So this is the current state. They have around 70 resorts in India, plus 10 in Southeast Asia, and 33 resorts in Europe. That is through their subsidiary Holiday Club. We'll cover Holiday Club also in our subsequent slides. So basically, if you look at these numbers, broad numbers, 70 resorts, member base of 254,000, room inventory of over 4,000. This is something which is a very good, which acts as a very good entry barrier. Any new competitor, even though that competitor may have a lot of funds, they cannot beat Mahindra Holidays on these numbers. A very good example would be Sterling. So Sterling also, in fact, Sterling was the pioneer of vacation ownership business in India. They started in late 80s, and Mahindra Holiday started in 1996. But still, Mahindra Holiday managed to do much better than Sterling. And if you look at the Sterling model today, they are a mix of both vacation ownership and rooms for other walk-in customers, because they have not been able to provide that kind of experience that more and more people come in their resort, right? So that is what is the biggest moat or biggest competitive advantage today Club Mahindra has, because it is not easy to have so many options like 70 resorts catering to so many different places in India and also other outside India as well. Next slide, please. So if you just summarize that the unique business model of vacation ownership business with the traditional resort business is this. The traditional resort business is asset heavy. It is long gestation. Why long gestation? You first put in your equity. You take in loan from the business, loan from the banks by showing your project report, and then you build your resort, as in you build your hotels and hotel units. It takes time to build that, right? And again, you have a perishable inventory. Why perishable inventory? Because once you have got your resorts, you have got your hotel units ready. If today no one comes in your hotel for one day, that inventory is perishable, has got perished today and forever. Or you cannot replenish that. If you are selling something else, if you are selling some product or services, you can still replenish the unsold inventory. But in case of hotels and airlines, you cannot. Just imagine why airlines give free tickets, very not free, but sometimes very attractive offers, because there are not much demand of passengers in those flights, and they have to sell it at a low cost, because if they don't sell it, if they don't have any passenger, that inventory is lost forever. In the next flight, whatever you get is your new inventory. The old inventory can never be replenished, right? Then the levered balance sheet I have already discussed, and then it is a cyclical business. As you know, if you look at pure play hotel companies like Indian Hotels and see their balance sheet, see their stock prices, you'll be able to understand they don't perform well during cyclical downturn, right? And you obviously see that wild swings in their profitability. Compare that to vacation ownership. It's an asset light business. Why an asset light? As in, it is not asset light in that sense that it doesn't have any assets. It does have, but asset light in the concept of the founder of the company or the promoters of the company do not have to fund in assets, right? The customers does it for them. And over here, you have the option of both lease and own properties. And the whole capex is funded by membership income, which we have already discussed earlier, right? So the customer pays you upfront for the membership also. Then they pay you every year for the maintenance also. And then they eat in your resort, wherein you can price them really high, and they are already priced high, and you get a good margin out of that as well, right? And your biggest advantage is your inventory is sold upfront. So there is no problem of perishable inventory here. What do we mean by inventory sold upfront? You have already sold the 25-year-old membership to the person who is paying you upfront. So you don't have that problem of, there will be times there will be seasons where few people will travel. So obviously you will lose out on the resort income because of the low occupancy, but you will not lose out of the room rent, because you are already getting the room rent from the customer upfront. So that is the biggest advantage of a vacation ownership business compared to a traditional resort business or hotel business, right? So that is why their balance sheet is debt free. We'll come to the, I think someone asked in the chat as well, whatever you see in the screener or in the reported numbers, it is not debt. We'll cover this debt part in the subsequent slide. We'll get more clarity on that. But right now, just understand this concept. Club Mahindra Holiday is a debt-free company with an extra cash. I'm talking about a standalone company, and we'll discuss about the HCRO debt also later. But Club Mahindra standalone entity is a debt-free company with a 940 crore cash in its book as on March 2021. So don't look at screener and then screener is a very good effective tool, but don't look at screener and then just think that it is a company which should not be even looked at. Go through the numbers, and we'll cover that in the next slide. Next slide, please, Dada. So how do you analyze a business, or how much strength a business has? By asking few questions like what kind of product or service it is selling. So like we always talk about technology or even some other products like electrification is happening in terms of automobiles, right? So we know that any company which is only focusing on combustible engines wherein diesel and petrol is used have a big risk of obsolescence, right? But there are many businesses, or there are not many, but there are quite a few businesses where obsolescence is not a big risk, and travel and holiday is one of them, because we all know it is a behavior thing. If we don't go for a holiday for a year, we get a feeling that no, it is a necessity. I have to go. I have to plan something. So out of compulsion, we do plan. And in fact, vacation ownership in India has been sold by this concept only. I have spoken to many members of Club Mahindra. The one reason for them to join a vacation ownership was they trusted the Mahindra brand. The second one, and the most important one, was this, that they thought that we are really busy and we don't plan for our holidays. But with a membership, when we have paid for the membership and when we will be paying the annual subscription fee, we will make sure that we go for a holiday, right? We don't want that money to be wasted, and we'll plan somehow. So that is how important holidays and vacations are for us, right? Second business model checklist is multiple source of revenue. So we now know that travel is not doing well. So obviously occupancy levels at the properties of Mahindra Holiday would be abysmally low at this juncture. Even the last year, from April till September, they had a very low occupancy. But from October onwards, they saw a very good occupancy level. But despite these problems, you will see their sales did not take that much hit which the market expected. Reason? Because they make most of their revenue from income from sale of vacation. And with the new accounting rule, we'll cover the accounting rule in detail in the subsequent slide. But let me just give you some idea about that. With the new accounting rule, what happens is, say if you bought 1 lakh, if you paid 1 lakh rupees for a membership of Club Mahindra, and company gets the cash 1 lakh today itself, right? But the company cannot book more than 4,000 rupees as revenue in this year, because as per the accounting rules, they have to spread this income over the next 25 years. So the same thing is happening for 254 customers of them. So every month they are booking the vacation ownership revenue. So even though the occupancy levels are low at this juncture, you will still get this large income stream going on. So that itself says that profit and loss account doesn't actually matter for this company, because they are receiving the cash upfront. What they do with that cash is more important than what is showing up in the P&L, right? So the multiple sources we have already discussed: the resort income, annual subscription fee, interest income on installment sales, and then the securitization. So let me just spend some time on securitization. So Mahindra Holiday today have more than around, I think around 1,200 crore as debtors. So what are those debtors? These are those debtors who have signed up their membership but have not paid the full amount. They have gone through this installment sales, right? So Mahindra Holiday, if they come up with a big acquisition plan and they need some cash, they can easily securitize these 1200 crore of debtors with a bank and get that money. So that is the advantage they have. And when they do that securitization, then also they make an income out of it. The third point is low customer concentration. Whenever we look at any business at Smart Sync Services, customer concentration risk is one of the most important risks we try to look at. Any company, any business which is at the mercy of, say, a handful of customers has a big risk, and we must be very careful before investing in them. But whenever your business is customer is business where there is retail customer. So there is like in case of Club Mahindra, you see 254,000 customers are there, 254,000 customers. So then you know that your risk is somehow diversified, and you are not concentrated on a few customers, right? Then there is a low supplier concentration risk as well, because in case of Club Mahindra, the supplier is nothing, as in how do they supply their services? Through their resorts, and they are not focused on or dependent on just one resort. They have 70 resorts spread out of, say, for example, something right now, Gujarat, we are listening that there can be a cyclone. So maybe in an environment when there would have been no COVID, if Gujarat will face a cyclone, maybe the sales will get hit in case of Gujarat, but they have other states where they will have more occupancy, right? So that is the advantage of this business. Next slide, please. And high customer switching cost. This is a very important point, high customer switching cost. That point is basically you have already paid upfront membership for 25 years. And the contract clearly says that once you have been sold that membership, you cannot ask for a refund. And even in case of the policies, even in case of the EMI customers, the customers who have not been able to complete their EMI, they also cannot demand that the money to be paid back to them. There is no refund policy at all, and it is made clear at the time of selling the membership. Next slide, please. Now let's come to financial statements, and we'll look at all the important points here. Basically, what so there are many. Sales and profits doesn't matter that much. You should not focus too much on the sales and profit. Of course, you should look at the expenses, how much they are spending on the operations. That is an important metric. But you should not look at revenues, and you should not look at profits, because it will keep on fluctuating due to many reasons. What is more important is how is the business, how is the balance sheet. So on the balance sheet, you see a lot of cash. You see no debt. Consolidated level, you see some debt. That debt is a part of, that debt has two parts. One is the loans they have raised in buying a Finland resort. That acquisition was done using foreign currency. So the loan was raised in foreign currency, which is only 3.5% interest. And the other part of the debt, which you see in the consolidated balance sheet, is lease liabilities. So we'll cover the lease liability and lease asset in the subsequent slide. But right now, just consider that the consolidated debt which appears on screener or on balance sheet or on the reported numbers, these are not actual debts. As in, a part of it is actual debt, but that is low cost debt. So it is not a debt in India where you don't have any problem. As in, you have to pay a high interest rate, right? And again, we have gone through the multiple source of revenue. It shows up in the P&L statement. You can see the income from sale of vacation ownership and the other parts like resort income and annual subscription fee. What is pricing power? So pricing power, we will see that there is a strong evidence of pricing power, not in case of membership sold, but in case of how they charge the food and beverage in their resort, because you have captive customers, they cannot go anywhere else. That is where they get the benefit of charging a higher price. But it is not like you are doing something unethical. Many people think that it is being unethical, charging too much. Customers are also getting a lot of advantage, as in, if you go to a Club Mahindra resort, you will see the resort experience, you will see the hospitality, and you'll see the other activities beyond that, which makes it different from any hotel or any other resort. So you have to be in those kind of resort and then understand the power of this pricing, which they do in case of their food and beverages. And significant discretionary spending, which can be curtailed. And we've already seen an evidence of this during this pandemic. If you'll look at the profit and loss statement of Mahindra Holidays, you will see from 1920, from the year 1920, if you compare the 2021 numbers, there is 15 to 20% reduction in all these expenses like sales commission, advertisement and publicity cost, marketing cost, customer acquisition cost. Customer acquisition cost reduced drastically because in the last 1 year, they didn't do anything physically. Everything was done on the digital media, right? And low debt repayments, low rate of interest leads to better operating cash flows, right? And ability to fund growth and capex with internal resources. So we have already covered that. They don't need to take on debt because they have 940 crore of excess cash visible, right? Next slide, please. I'm sure this person, Warren Buffett, needs no introduction. So I'll just straight away go to what he writes in many of his letters. So this is one of the quote which he has repeated quite a few times in his letters. So the best business, I'll read out this one because this is very important in explaining Mahindra Holidays model, right? So the best business to own is one that over an extended period can employ large amounts of incremental capital at very high rates of return. So that is very clear, right? Any business which can earn and also employ large amount of whatever you can say, large amount of incremental capital at high rate of return. They are the best businesses. You have examples like Berkshire Hathaway, which has been incrementally investing for so many years in their insurance businesses, even though they had their list of failures. But some of their businesses have done so well and they have been able to deploy a large amount of capital, and that is where they have done well over the long term. Even though they, in the last few years or last decade, you can say that their performance is not as per their past performance. But the point is, if you have any business where there is a capacity to keep on redeploying new cash flows, those businesses are one of the best businesses to look at. A vacation ownership business is like that. Club Mahindra business is also like that because we have the next slides covering that. The second point is any company's level of profitability is determined by three items: what its asset earns, what its liabilities cost, and its utilization of leverage. So how our attractive float does affect the calculation of intrinsic value. When Berkshire's book value is calculated, the full amount of float is deducted as a liability. We'll cover the float part again when we'll cover MHRIL's business value calculation. But that's an incorrect way to look at float, which should instead be viewed as a revolving fund. So what happens in case of a float? Any businesses which is generating float, the float will appear in the liability side of the balance sheet as if it's a liability which you have to pay off. But there are many floats which are long and enduring, where you don't have to pay anything. Like in case of Berkshire, they say that we have a revolving fund. Like they get a lot of premium from their insurance premium. They don't from their insurance business, but they don't have to pay out all what they have received from insurance premium. They have to pay a part of it, right? Similarly, in case of Club Mahindra, they receive the membership business, and that money is shown as a deferred revenue. It appears in the balance sheet, but that is not a liability. They don't have to pay that to the customer again, or they have to pay that to anyone else, right? So the cost of that liability is far lower than what it is carried in the balance sheet, and we'll see that in detail now. Next slide, please. So what we learned from Buffett on MHRL is, so high quality and high return businesses generally require relatively little capital of its owners. So you can see, in case of, it's a very interesting point here. 18 crore was invested. So the promoters of Mahindra Holiday, M&M, invested 18 crore in 1996, and that's it. They didn't invest a penny after that. Rather, they got 100 crore from their stake sale in the IPO. And at that point of time, they still retained the 89% stake. At that point of time, SEBI didn't have this clause of 75% promoter holding ceiling, right? And they subsequently sold off their stake at a higher valuation as well. And from 2009 till 2014-15, being the largest shareholder, they also got a lot of dividend income. So I'm not even talking about that. Today also they hold 67% company. So that is how attractive this business has been for. In fact, none of their other businesses have shown this kind of ROE generating ability, wherein you have put in only once and you didn't have to put money again. Rather, that business is giving them cash back, right? So that is where you can see that it's a high quality, high return businesses and generally require very little capital from its owners. If a company can create a float at very cheap rates, it can earn great ROE even when ROE is average. So we talked about a lot of companies and businesses where we see that return on asset is not so high. So it's a business which should not be looked at. So we don't know exactly what is the return on asset on Club Mahindra. But one thing we know that it helps a lot. It gets the benefit of leverage. And when I say leverage, I don't mean debt. When I mean leverage, I mean the float, the long and enduring float in the form of deferred revenue pool, which is sitting on the liability side of the balance sheet. It is the fees which is received in cash already, but will be booked as revenue over the membership period. And a large float, as we discussed earlier, when that float appears in the balance sheet on the liability side, it will definitely reduce your book value. So on price to book value, if you look at those companies, it will be trading at obscene price to book multiple. But the best way to value those companies is to adjust those book value and then look at the whether the market is pricing it well or not, right? Next slide, please. So you can see in the end, the contract liability deferred revenue. This is last year's and 2021 and 2020 numbers, right? Next slide, please. Now, numbers don't always show the complete story, right? You can see the sales stagnating over the last 4 years, right? You may say that before COVID, what was the problem? So the problem was the change in accounting rule. Mahindra Holiday had to change their revenue recognition policy completely after 115 and 116 accounting rules came, right? Ind AS 116 and 115 came. You can see the net profit is also declining. You can see the compounded sales growth, profit growth, stock price, obviously that is visible, and there is no ROE, right, in the last 3 years. That is only because of the change in the accounting numbers, because of the rules change. Next slide. Look at the balance sheet. So now you see a lot of borrowings. So that borrowing is nothing, but most of it is the lease asset. Most of it is the lease asset, right? And the lease liability is there in the borrowing side, and the amount which you will see in the lease asset, in the lease liability, is matched on the asset side in terms of lease assets. So it is just an accounting entry. It has nothing to do with borrowing. It is not a borrowing. It is not a debt which they have to pay, right? Next slide. So the devil lies in the detail. We'll now cover the detail. So reserves, you would have seen that the reserves were negative. Why reserves are negative? Because company used to record basically 70% of their membership income in the year in which they sold their membership. Now, in the current scenario, they only book 4%. As we discussed earlier, only 4% of the membership income is getting booked today, but they earlier used to record 70%. The reason for that is they thought that because most of the expenses which occurs for any vacation ownership business is before selling that company, because they spend a lot on marketing, on training their staff, on customer acquisition. So that is where the company was estimating that 70% should be booked in the year of the revenue, in the year of the sale, and 30% should be spread out over the 24-year period. But with the change in the policy, now they had to make all the changes retrospectively. And when you make the change retrospectively, obviously it does a change in your balance sheet. So they had to take out from the reserves all these things, and that is where the reserve has got negative now. Liabilities, if you can see borrowing lease liability, that is the biggest part, and that is 1,427 crore. Okay, these numbers are in lakhs, so that figure is 1,427 crore, right? Next slide, please. So 1,427 crore of lease liability. And if you look at the asset side here, you see right of use of asset. That is again 1,390 crore. So whatever the liability is on the liability side is getting matched on the asset side. So it is not exactly a loan. It is just an accounting entry which has changed now. That's it. The company doesn't have a liability of 140 crore, 1,400 crore, which looks there. And when you look at the balance sheet in screener, that is what it will say, right? And if you look at the last picture, you will see the company is profitable and it has healthy cash flows and has declared every year dividend since 2006. But because of the policy, accounting policy, and the policy of the government, as in the corporate affairs, they cannot declare dividend today because they don't have reserves. Until unless their reserves become healthy, they'll not be able to do. And that is happening because of accounting entry. It is not that the company doesn't have cash, right? Next slide, please. So we have already covered this, so we can, I'll just skip through this slide. This is the rationale which they gave, why they booked 70% of the vacation ownership income in the first year, and later on 30% of the revenue to be carried forward for the whole 25 years, right? We'll move to the next slide. So these are the actual numbers which we believe that matters. So you can see what you have to look at is number of members, number of resorts, number of rooms, member room ratio, and deferred revenue and cash balance. So if you look at the last 10, 11 years of history of Mahindra Holiday, you see members, resort, room, all have been growing. And the biggest advantage is the deferred revenue and cash balance growing. Let us look at the deferred revenue number. The deferred revenue number is growing at a faster rate now than compared to earlier. If you see in 2018, it was 2000 crore and it changed to 5200 crore in 1 year. That was the year when 115 and 116 was introduced. And that is where they had to make that adjustment in revenue, and that led to the change in the liability side, wherein you can the profit got hit, as in the reserves got hit, and the deferred revenue increased. So more or less, whatever reduction happened in case of reserves got included in the deferred revenue. Again, there is just an accounting entry change. No cash has been lost by the company. So that is something which we need to understand. And in case of cash balance, they made a big acquisition in 2014-15 of HCRO, which is a Finland resort company, which we believe was not a wise decision. We'll cover that also. Despite that, they have been growing on their cash pile. And if you look at from 2018 till 2021, the cash has been increasing at a breathtaking speed. Again, the main reason for that is the company has not been able to return back that cash to the shareholders in the form of dividend. If you look at the past history of Club Mahindra, they were generous in dividend because they were showing good profit and they had good cash balance and they were paying off dividend. But they have not been able to pay off dividend for the last 3 years because of this accounting issue. So what are the strengths? If you look at these numbers closely and try to identify the strength, this is a business which can invest large amount of capital because they can still go on for more resort and more rooms, because member room ratio is still not too high, as in not too low. They can still hire, try for a lower number, because the lower the better. The more the number of rooms compared to the members you have, the better would be your service quality, right? Second, need not put owner's money. We have discussed that. Third, high barriers to entry, wherein it is difficult for a new entrant to create that kind of a resort, number of resort. Fourth, it is an insurance business with no underwriting risk. In case of insurance, there is an underwriting risk. You get all the premiums, but there is an underwriting risk, because if there is an eventuality which is happening, you will not be able to, as in you will have to make a payment. There will be a claim. But in case of Club Mahindra, there is no refund. Once you have paid the money, it is just like opposite of giving loan. In case of loan, the bank gets gives the loan to a person who is buying a, say, bike. The bike remains with the person and bank gets the interest, right, by giving that loan. Over here, but the property remains with the person who is taking loan. Over here, the property is still with Club Mahindra. After 25 years, if a member is not renewing his services, Club Mahindra can sell this service to some other member at today's inflated rate. Someone who has been sold this membership 25 years back and is not continuing from today, because it is 25 years now. So 96, it started in 2021 today. Club Mahindra can offer, can get a better customer for that thing. And they don't have to part away from their, what do you say, the assets as well. The asset remains with the company. That is the biggest advantage this business has. And last 4 years, you can see the operating cash flows going up. Next slide, please. risk to the thesis. So we have right now, we have only focused on what worked really well. So if everything was working well, the stock price would have been a 2-bagger, 3-bagger, 5-bagger, or maybe 10-bagger. Why it didn't do well? Because businesses doesn't work only on numbers. They work also. So it is a customer-centric business. If you have dissatisfied customers, it is very difficult to sell. As in, it is very difficult to continue your business in the long run. If you look at the history of Club Mahindra, earlier there were issues where they used to sell their rooms to non-members as well to earn more income. That was the aim of the company. But with Kavinder Singh taking charge in 2014, these things have completely stopped. They have very less income from insignificant income from rooms rent out to non-members, and that is also done only during lean season, where their analysis show that these are the resorts where their customers are not going to come, only on those. And these, there are separately separate property marked for them. That is where they get the income from the non-members, right? A big capital misallocation happened in case of this company, which was acquiring a company like HCRO, the Holiday Club Resort in Finland. They didn't need to do that. They spent around 400 crores acquiring the stake of the company. And if you just look at the math, on an average, 1.5 crore is spent in building a one room for Club Mahindra. They could have got 266 rooms. That could have added a lot of advantage and would have been able to serve a lot of members, existing members. And look at this thing. In India, who is going to, their rationale for taking that decision in 2014-15 was that they got a global recognition. Now they are the largest vacation ownership company outside the US. That's a good thing. It's a good number and a good statement to market yourself. But ultimately what matters is, are your customers satisfied? So over here, they say that we will offer our Indian customers to go and spend their 1 week even in these resorts. But just look at from an Indian mindset. As an Indian, are you going to spend so much on the flight ticket and other stuffs just to use your 1 week of Mahindra Holiday membership, where food again will be a costly? You will have to stay in a resort in a foreign country. If you are going to visit a foreign country, don't you think you would want to visit a lot more than just staying in a resort? In India, you would prefer a resort because most of the times our reason for taking a break is to relax, to take time off from our normal life. So we want to relax and chill in one resort for a few days, and that works here. But if you are visiting some country outside, you won't be able to do that. You won't. That is not an attractive thing for you, right? And you will get a much better deal from something like a Thomas Cook, because which is into this business of sending foreign tourists from India to abroad. They will give you a far better attractive deal, right? So that was probably a big misallocation. And in terms of Peter Lynch, you can say a diversification. It's not diversification, but diversification, wherein when a business throws up too much cash, there is always a tendency of the manager to spend that cash in an ineffective way. That is probably what happened in case of Club Mahindra as well. The best thing for them should have been to invest that cash in building more inventory, because customer satisfaction is one area where the company has not performed well over the last 10 years at least. It has shown time, it is showing signs of improvement, because they have now stopped EMI, as in they are not encouraging EMI customers, because they have realized EMI customers have a problem. Some of them don't complete their installment. These members do not even pay the ASF, so company have to make a lot of follow up for the annual subscription fee. These members do not come to the resort because for them resorts are probably high, as in expensive. So company miss out on the resort income as well. So that is where, if you'll see, in the last 2-3 years, there has been a lot of effort in trying to improve the quality of members they are having, and also trying to invest in the resort. So last year, even in a pandemic year, when we have seen that the travel has been hit, they have invested their highest amount in terms of building resort and building room inventory. And you have seen the result this quarter. We'll move to the next slide. So it is better to be roughly right than precisely wrong. It's a very common, you can say it's a cliche today. Many people say that, but it is still a very underappreciated thought process as for investing. We focus too much on price to earnings, price to book, price to sales. But a businesses where sales are happening for 3-year period, 10-year period,
Ankit,
or
sir, sorry to
20,
interrupt you.
25 years. Yeah. Hello.
Yes, Abhimanyu, was that you? Who was that?
Yeah, I think there is some disturbance in the voice. Some people are messaging me. They are saying that the voice is cutting. Two people have messaged me just now.
So
So
I'll do
I
one
think
thing.
maybe
I'll
you
just,
can switch off your video.
yeah, I'm doing that only right now. Okay.
Okay.
I hope my voice is clear now, right?
Yeah, we can hear you.
Okay, great. So
Yeah, I think it's clear now. Okay.
yeah. So I'll just stop the video. Okay. So we were on valuation, right? So it is an underappreciated thing wherein we focus a lot on the price to earnings. See, price to earnings, price to book, and price to sales always talk about the current sales, the current book. But a business like Mahindra Holiday, how do you value a business like this? It is very difficult to actually know the true value of the business, because what you cannot value today is what is the lifetime value of the customer, because they are being sold a long-term membership of 25 years or 10 years. It is very difficult to value that today. So a good way of valuing it is, or how to make your decision whether to buy the business or not, is look at replacement value. A simple heuristic is, replacement value means how much you have to spend in just building this business today. I'm just talking about the asset, not even talking about the employees and all. 1.5 crore is a cost of building one room. They own 2,520 rooms today. Their total rooms are even more, but I'm talking about their current inventory. 2,520 crore, 2,520 rooms, 1.5 crore. So total room value itself is 3,780 crores. So 2,818 crore, which is the market cap today, is less than the replacement value of this business. Add the cash balance, unsecured debtors, and total asset value comes to around 5,925 crore. And now you may say that out of this asset, there is also a liability of this one, which is their deferred revenue. But that deferred revenue is not a liability. You don't have to pay that money to anyone. If a member is there with you for 25 years, that money is with you. Even if that member leaves after 5 years, you don't have to pay him anything. That because you are leaving 5 years, I'm paying you the remaining part of the membership money. No, that money still stays with the company. So that is where on valuation the company currently stands, right? We'll move to the next slide. I think we have only 2 or 3 slides left. So if the business is so cheap and so attractive, as in if it is so attractive, why it is trading so cheap? So we have covered already some of the thing. Over aggressive selling led to poor member quality and dissatisfaction in the past. Aggressive revenue booking in the past dented investor confidence. In years 115 and 116, changes in FY19 and FY20 has completely changed the profit and loss in balance sheet. And reported numbers in the PL and balance sheet lead to very poor return ratios, which we already know. Renting room to non-members. Again, that was a thing of the past. High members to room ratio leading to unavailability of rooms. This is probably one of the most important metric to track this company going forward as well. One thing which we should always keep on tracking is this member to room ratio, which has gone down in the current year because they have not added any new, as in they have added new members, but they have rejected some of the EMI members. So net they have not added any new members this year. So the member to room ratio has gone down, which is a good thing for the company. They have added more rooms and they have reduced the members today. But going forward, this number should not increase a lot. We don't know what is the right number, but it should keep on falling, or it should stabilize at the current stage. It should not keep on increasing. That is a big sign of a negative thing happening with the company. The second last point is the negative customer reviews. See, customer reviews we are living in an online world. For any product or any services, there will be 50, I'm just assuming, if a product is a good product, there say 50 people are liking that product and 50 people are not liking that product. I'm telling you, there is a high probability people who like the product will not come on internet and give the good reviews always. But people who don't like the product have a higher chance of coming online and putting it out. So just don't based on just the negative reviews. I am not saying the customer experience has been wonderful. This is a problem with the company, which the company has already started addressing by increasing the room count so that they can serve their customers during the high traffic season. And the last point, which is very evident to all of us, that COVID spread is again leading to fall in demand for vacation at that moment, at least. Next slide, please. I think I've already taken a lot of time, 12:45. So we have covered it more than 1 hour. So I think I have only 2 slides left. Next slide, please. Akhilesh?
Akhilesh bhai, next slide, please.
I think some internet issue. We have got it. The previous one. Again, one slide back. So what are the possible triggers for re-rating? These are the 2 big re-rating which can happen. Number 1 is if room inventory get built up aggressively, thereby increasing customer satisfaction and convenience. The second one is if HCRO is turned around or exited completely. Now, why we think that there can be a case where HCRO can be exited? We see that the M&M group is now being headed by Mr. Anish Shah. And if you look at some of his past interviews, he is a very good capital allocator. And in the recent interviews also, he has laid out very clearly that they are going to be focusing on the cash flows. And this is one business which is actually which is having the potential of giving a lot of cash flow back to M&M. So they would want those cash flows for their other businesses which are struggling, which need more cash flows, right? So there can be a case that HCRO may be exited, because we see something like that happening in their group company M&M as well, where they are exiting loss-making foreign acquisition. So that could be a good thing for the company. Or even if they can turn around the company and it does well there, that can also be a good re-rating, because today HCRO is not making profit. It doesn't have very high cash flow. Next slide, please. I'm not going to read word by word here. This is a very famous pre-mortem technique which Daniel Kahneman used in his book Thinking Fast and Slow, wherein he mentioned that if you are very bullish on any decision for any organization, whenever any organization is very bullish with a new idea, it is advisable to hypothetically imagine that, say, 1 year down the line or 2 year down the line, this project was a disaster. So, and just try to write down what wrong can happen. So we looked at Club Mahindra from the same lens and tried to look at three things or three way in which the Club Mahindra business can go bust. Next slide, please. So the first one is, the easiest way is to fail is if they get most of their cash from new customer. If they stop making new customers, it may not reflect in 1 year, it may not reflect in 2 years, but it will show up in the books in the 3rd year for sure, because their cash will keep on going down because they are not getting any new cash, right? So this is something which is very important. We have to keep on tracking. So we had that slide where we mentioned the numbers we have to keep track. That is the numbers we have to keep tracking, and the company discloses that number very clearly in all their presentations. So it is very easy to track, and they hold con calls also, so you can read all the past transcript as well. The second way in which a company can fail is that they get new customers, but the company take their money and they do not increase the resort count, which was the thing of the past, where they were actually doing that. They were taking the money, not investing enough in the resort, and that led to a lot of customer dissatisfaction, right? If this continues for a long, right now company is saying that they are going to invest 1,200 crores over the next 3 to 5 years in building new rooms. If they do that, for sure, it is going to lead to customer dissatisfaction. We cannot say about the stock price, we cannot say about anything else, but we can be assured about that it will lead to a lot of customer satisfaction, right? But if they have just announced today that, as in recently, that they are going to do 1,200 crore, but they don't do that due to any reason, or they do something like, say, 300 and 400 crore, that is a big negative again. That is a second way of failing in going ahead in this business. And the third point is, when you burn up a lot of cash in operation, where too much money is spent in the resort creation and operating and marketing activities and customer acquisition, as on date, Club Mahindra Holiday gives us an indication that on operational front they are doing pretty well, but on capital allocation they are not probably the best company to bet on. So on capital allocation, we should keep on tracking and see if they continue to improve from here. Next slide, please. This is what we leave you with. These are the closing thoughts. As per the understanding of the pre-mortem technique, before market realizes, you can probably get some hint and clues if this business is not doing well, where you will see net member addition turns negative. So from last year also, this year, you will see that the net member addition has turned negative. But I'm not talking about that number for 1 year. If it happens on a, and this is not a normal year, it is a COVID year. And mind you, they still had 10,000 new members added this year, despite COVID. They actually let go of the EMI members. That is where it now looks negative. So on a normal year, on a regular basis, say for 1 or 2 years, if their net member addition turns negative, that means more people are leaving the Club Mahindra membership than adding. That is a very negative sign. Even though it may not show up in the balance sheet and the profit and loss, but that is something which should raise the alarm bells. Occupancy in resort, if it drops consistently, that should give you an indicator that either they have lesser inventory or they are not providing the services in resort of that quality that more people are going. Third, resort income should not go down. Resort income should, again, barring the current COVID period, in normal years, resort income should keep on going up because more and more people will go to the resort and the inflation will be added in the food and beverages cost, right? Cash level, this is a business which is so much generating so much cash. If the cash is getting dried up, that is again a negative. You don't have to wait for the debt to appear on the books, but to see the cash levels itself. So I think that is it. Again, we would like to, before ending, we just like to repeat the disclaimer, and that is, this is not a recommendation to buy. The idea was to completely educate you all about how we thought about this business, and we are open for Q&A. I'm sorry I took a lot of time because there were so many technicalities which I thought that it was important to explain clearly, right? So now we are ready for all the questions. Just try to
Thank you, Ankit bhai. Thank you, Ankit bhai. Thank you, Akhilesh bhai, for the wonderful and crisp presentation. So we had actually planned that we'll do a 1 hour presentation and 40 minutes Q&A, but we still have around 20 minutes, 15 to 20 minutes. So we'll straight away jump to the Q&A, and Abhimanyu, I'll hand it over to you. Now, if you want, Ankit bhai, you can start picking questions directly from the chat, or Abhimanyu can read them out to you. So whichever is comfortable for you, we can do. So Abhimanyu, you can take it over from here.
Thank you so much, Ankit bhai. Very wonderful presentation. So I have noted down the question. Actually, people have been sending some questions in the chat box since before itself. So what we'll do is, I have noted down some questions.
I just have one request.
Yeah.
I think if it is possible for you all, since it was a mistake from our part that we overextended the period, we can continue the question for as long as people are there and willing to ask questions. I think that would be
that's
better.
wonderful.
All right, that's great.
Wonderful.
That's wonderful. Okay, so I have noted down some questions. So I have not read all of them. So feel free to tell me that we should not take up these questions, but I'll try to filter them out for you. So
Sure.
I think the very first question which we had was that after this webinar, can we do analysis of companies similar to this? What exactly are your pointers of analyzing companies which are similar to Mahindra Holidays?
So that is the beauty of this business. There is no company which is similar to this of this scale in India and in the listed space. How will you do the analysis?
I think what they wanted to ask was asset-light models and things like that.
Okay.
How exactly some pointers you can give of how we can analyze such companies?
So any company which is not having debt on its book. When I say debt, means clear loan in Indian currency. Even in foreign currency, if you take too much debt, that is also not advisable. In case of Club Mahindra, they have their services there, so they don't have any foreign currency risk, right? But in case of any company which is domestically owned and they are having operation in the domestic market, and you are having a lot of foreign debt, that itself is not a good thing. So that is the first thing to note, whether the company's book has any debt or not. So if a company's books has low debt, high cash, there is a great chance that there must be something in the business which is able to generate high cash from operation. So CFO is a very important tool. Many companies may not be free cash flow because they are constantly investing in the capex. Like even the Club Mahindra model is also there, where they have to keep on investing in new companies. But what is important is whether they are generating high cash flow or not, and that is, you will not be able to get all the details on screener. Screener will only give you the final figure of CFO, but you have to go into the details of the annual reports. See whether it is coming from customers or it is coming from suppliers. Sometimes what happens in many businesses, you get a leeway of paying to the customer, paying to your supplier a little later. in our understanding in SmartSync, we don't value that as a big edge, because your supplier can anytime change that rule, and that is not basically you're dependent on your supplier. If your supplier change, you don't have any option. But when your customers are paying upfront or paying early, and due to that you are able to have a lot of cash in your books, that shows that there is something right with your business or product or services. So those things work in any good quality business. So if you see and analyze any business which is generating a lot of cash and having negative working capital, they will first of all have no debt. Second, their product or service will be something which is very desirable. So travel and holiday is a desirable service and product. So that is where I hope I could answer the question.
Yeah, wonderfully answered. I think that should answer his question. Okay, I think this question might be directed to you, but I'm not very sure. So the question is that I have gone through your question in recent con call. Please elaborate on retiring old customers, as I haven't been convinced with the answer by Kavinder Singh.
Yeah. So I agree with you in part. The management the management actually did not respond to that question very clearly. They have their own reasons, so let's not get into that. But my question was basically, Mahindra Holiday, their flagship product is a 25-year product. It started in 1996, right? So any member who joined the company as a member in 1996 will now retire. Now he will have to pay again to the company, right? He will again have to pay to the company for a new membership. So over the next, say 4, 5 years, 6 years, whatever be, we will have a lot. We don't have the actual data. They have not shared that data with us, wherein you get to know how many members were there, say in 1996 and 97 and 98. I'm assuming that those number of members would be fairly low. But over the next 5 years or 10 years, this number would be significant, right? So these members would actually leave let's take a pessimistic scenario. All these members are not satisfied with their membership and they leave the company. And the company will continue to have those assets. So they, on the member room ratio count, they will have a lot of asset available for their existing members. And if they do all the right things in attracting the new members, they have a lot of edge now, because now they have extra inventory which is getting free. Earlier it was not available. I hope you could understand what I say. I don't know who asked the question, but I hope the
I have not checked his name exactly, but I hope that was able to answer his question. Okay, the next question is somebody has asked this question. They are saying that there is a growing trend of aversion to asset ownership amongst the younger generation and consumers, especially the millennials looking for newer experiences. So basically his question is that vacation ownership is high ticket sizes. So do you think that Mahindra Holidays could possibly lose its value in the future?
Yeah, that is a very good and intelligent question, and that is a very valid point. It is a fact that millennials will probably not go for a 20, and it is a product which is very difficult to sell. It is a push sell product. They have to come up with very lot of psychological bias, and they dole out iPhones and cruise holidays as free for people to join membership. And I'm not sure how many of you would have actually got called from Club Mahindra, wherein they'll ask you for a free dinner and they'll give you a presentation on the company. So those are some of the psychological tools they apply. But coming back to the millennials point, they have launched this 3-year product because of that only. And if you actually do some number crunching on their last 2 years revenue, how much they have earned from the new members addition, the amount will come to somewhere around 2 lakh. So that itself means that the 25-year-old policy is not selling that much in the last 2 years, partly because of this dissatisfaction people might have, and the kind of negativity which was around. Because you will see on the social media or on any kind of review site, you will see all the negative things being highlighted. But I've actually met a few people, few members who are happy also, because they have different kind of expectations from this. So catering to this millennial thing, they have also launched this, and this is a thing which we have to keep on track, because again, when a 25-year product gets replaced or gets overpowered by a 3-year, the whole dynamics may change. So we'll have to keep a track on that. So that's a risk for sure.
Okay, beautifully answered, Ankit bhai. So, okay, next question is a little bit about the capital allocation. I believe you talked a little bit about the
Sorry,
misallocation towards
I'll
Finland.
just pitch in here. I saw one of the comment that can we rely on screener.in data. Screener data is very good, and we do a lot of analysis just relying on screener data. So we are not saying that screener is bad. What we are saying is some businesses you don't get the real quality of the business or real value of the business just by looking at screener data. It's not to say that screener is not important. Screener is important. You have to use screener, but it doesn't mean that you only go by the screener numbers. Screener's job is to show you the numbers. Now it is, as an analyst or as an investor, your job is to look why those numbers are getting reflected in the screener. Yeah.
Screener is directing us into the right direction.
Yes. Yeah,
okay,
please go ahead.
So next question is on capital allocation. You talked a little bit about their misallocation towards Finland. So somebody's question is that how exactly is the capital allocation other than the Finland of how is the record of the company, and if they are allocating some capital towards certain resort, what is their incremental return on those capital? Do you have any idea about that?
Yeah, see, I think Peter Lynch made this comment some time back in one of his book. I remember reading wherein run a business which any idiot can run. Okay, so it is that kind of a business in some sense, wherein if you don't do the big mistakes, you don't require very exceptional high quality capital allocation skills. All you require is you don't do any goof up like they did in case of Finland. So it is not very clear. It is not very easy. It is very easy to understand how their capital allocation skill has been, because you can see they have returned so much cash to their owners, shareholders over the last many years, and they have been able to increase their inventory, which is very much important in any business, especially a business like this. And still they are left with so much of cash which can be used in terms of further building in the inventory. In fact, one of the questions which I asked in their con call is that even after this 1200 crore of expansion which they plan for the next investment capex, which they plan for the next 3 to 5 years, they will still be left with more cash if they continue like this. So they may not be exceptional capital allocators, but they should at least not do a goof up like Finland more. That is more important.
Okay.
I hope I could answer this one.
Yeah, definitely. I think that answers it. So next question is it's actually regarding the competitor of Thomas Cook. So I think somebody is asking you to elaborate more a little bit about Thomas Cook business model as compared to Mahindra Holidays, and wouldn't it be a better business model compared for millennials who are just looking towards researching about the place they want to visit and then book their details?
So, see, I'm not going to compare which one is better, Thomas Cook is better or MHRIL. They are completely different businesses. Thomas Cook has one of the subsidiary as Sterling Holiday, and as I mentioned in one of the in my presentation, that Sterling today is moving away from vacation ownership. They are 50% vacation owner and 50% they are earning through renting their rooms to non-members. So that is the challenge for a vacation ownership and a new competitor. That is what I can say about the vacation ownership. And coming with as in talking about the business model changes, Thomas Cook is a one-shop solution for all your travel needs. Wherein if you want to travel, they earn most of their revenues through their inbound and outbound travel services, wherein anyone in India or Hong Kong or even other countries, they want to move out. They have in 3 countries, India and Hong Kong, in 2 countries here. And for any business, anyone who wants to move into India and look at travel here, they also get all the services from Thomas Cook. Revenue spinner is this, and major profit or margin of their business comes from their forex business, wherein they trade in the foreign exchange. All their members get foreign exchange from their foreign exchange card. So that is the biggest in case of Thomas Cook. The advantage of the card business is higher revenue, higher margin, but in case of travel business, they have a high float, because in case of travel business, even though their margins are very low, they get all the booking amount in advance, and they have to pay to the other agencies a lot later. So they also have a float in their business, but it is not good to compare these 2 businesses. It is just like apple to orange comparison. They're completely different. Completely different.
Okay, sense. Right. All right. So next question is regarding this millennial. I think there's a lot of questions regarding this whole theme. So somebody says that does Mahindra Holidays have a plan exactly to how exactly they can, grab this area of millennials who want to go only to specific resorts? How do they tackle this type of situation? Do you have any idea about that?
So it is not very clear from the company's presentation or communication in the con calls as of now, but and it is still an evolving thing. It is definitely a risk in terms that millennials want more options. So what they can actually provide them is a more satisfaction if they can come out, as in if a 3-year membership, they don't declare the membership rates as of now, but you can find out the rates, and if the membership rate is attractive and you get a good experience in the resort, you will value those things, right? And you would want to renew your 3-year membership, right? So that is what they have to do. But I agree that even a 3-year commitment is a tall ask for a millennial. So when you compare that with booking on any OTT platform, wherein you just go online and just check the thing. So the major difference between millennials and the major difference between booking a holiday online and booking a holiday with Mahindra Holiday is this, or any company in vacation ownership is this. Number 1, if you are going with your friends or you are going alone, that is where cost is the most important part. But when you are looking for, most of us nowadays, if you ask say 100 people today, I think more than 70-80% 70-80 people will say most of us holiday just to de-stress ourselves. We have no plan to visit a country or visit a place or a town or a city or a state, but we want to just chill and relax and take time off of our daily busy schedule. And that is the concept which is still evolving in India. If you look at 10 years back or 20 years back when we were young, and when our parents were deciding the holidays, it was never like we'll go that this hotel and we'll stay at that hotel or this resort. It was always we will go to Sikkim, Gangtok, and we'll visit these places nearby. That is a shift in the consumer sentiment which is already happening, and it is going to increase its pace going on later on. So it will not matter to you whether you are staying in one resort for 3-4 days. What matters to you is quality family time in a good atmosphere, having a good experience. And plus, mind you, the discretionary spending capacity of an average Indian has also increased in the last 15-20 years. So that is where their positioning is different from what we do in case of an online travel thing. But yet it's a push product. As I said, it is not very easy to sell even today. Yeah.
Right. That makes a lot of sense. Okay, so up next, there's a question regarding that accounting thing you were talking about. So somebody says that what exactly is 115116, and can you elaborate a little bit about how the numbers have changed on the balance sheet due to the accounting rules?
So let me 115116 is just the accounting, as in these are accounting standards. Okay. Ind AS is the accounting standard. You don't have to worry about what exactly it is. It is just the norms we have to follow as Indian accounting standards rule the this thing, the rules of the accounts. So we have to follow that, right? So this was a new rule which came in 2016 and 17. So company had to abide by those rules. Now let me just try to explain it as simple as possible. What the company was doing, say the company was selling 100 rupees of membership. They were booking 70 rupees as revenue in the first year. And just assume that they were making 50 rupees of expenses. So 20 rupees of cash was generated, as in that 20 rupees of profit was generated per year, right? Plus the company was actually getting 100 rupees, and out of that 50 rupees was, now look at the cash flow. Out of the 100, all your expenses was 50. So you were getting 50 rupees cash. Got it? So in the balance sheet, if you go now, you will have cash as 50. You will have 20 rupees as your profit, which will be in the liability side. You add it to your reserve. Okay. And you will have the assets, and it will balance like that. Okay. But now with the new rules, what they cannot do is they cannot book 70 rupees upfront. They have to book only 5 rupees today, and they will book 5 rupees for the next 25 years, and they have to make all the changes retrospectively. So whatever they had been carrying on over the last many years until this new rule came, they had to make sure that they make all the transition changes in their balance sheet. So what happened is the 20 rupees which they were carrying as reserves of profit, that will take a hit. Why? Because that 20 rupees was generated from booking a 70 rupees revenue, which was not possible, which is not possible right now in the new rule, right? And based on that, they will have to reduce their reserves. So I'm not going into the actual numbers, how much the reserve will reduce, but the 20 rupees will now reduce drastically, right? And you will get an increase in the deferred revenue, because earlier only 30% of revenue was being deferred. When I mean deferred, what I mean by deferred, those 30% of revenue was to be recorded in the next 24 years. But now 95% of the membership value has to be deferred. So that deferred revenue has actually increased. I hope you understood the change in the, it's a little technical, but that is how it works. As in, your reserves go down and your deferred revenue increases. So ultimately there is no change in the cash flow, but your balance sheet and your P&L will show different numbers. Your profit will take a hit. The profit suddenly for any one member, from 100 rupees, 70 rupees, which you were recognizing, now you're recognizing only 5 rupees. So of course, the profitability will take a hit, revenue will go down. And that is what has happened in the last 2-3 years, which you have seen.
Right. I think that was beautifully explained. If he has any other questions, he'll ask in the chat box. Okay, Arpit Bhai is also there and this is his question. So he says, apart from ownership, how do you looks the business of new entrants like MMT, Ease My Trip, and even regional players having good command without ownership?
So I would say a good question. I would say, Arpit Bhai, I would say more what do you say? The regional players would not be a big threat, because regional player can only cater to one particular region, right? the kind of diversity in the asset base of Mahindra Holiday, wherein you can go to any part of the country, right from north, south, east, west, center, anywhere you will find a Mahindra Holiday. Any regional player cannot offer that kind of a diversity to any customer, right? And you have to be in one of the Club Mahindra Holiday Resort and see the hospitality. There's specifically some of their good resorts and best resorts, like in Goa you have, and then in South also they have many properties where. So those kind of experience a customer is not going to get in any regional player. That is for sure. But the second point which you have mentioned is surely a threat, based on the kind that is more on the psychology of the current customer or prospect. So the current millennial generation, it is very difficult to sell them even a 3-year property. So that is something which we have to keep on tracking and see how it goes in that. So that is definitely a big risk, which we have to track.
Okay. Okay, so there's one more question. The question says that, do you think that partnering up with the banking companies and credit card companies could be a thing for Mahindra Holidays? Like in USA they have certain programs such as Hilton Hotel has it, and American Express has tie-ups with a lot of hotel chains where you do some spending and you get certain points and you can avail those points on specific resorts.
Right. I'm not aware whether they are having. I'm assuming that they must be having some sort of a arrangement with some sort of finance company or banks.
Okay.
But I'm not aware, to be very honest.
Okay. So we'll take this question next time. Okay. So next question is from in fact it's from Ayush. So he says, does RCI not have resorts in Finland? RCI what?
But RCI owned resorts would not be those quality, would not be that kind of a quality which they are claiming in case of HCRO. That is one. Plus, you have a more control over your own property. In case of RCI, you are depending upon you have to exchange that with what they are offering, and you might not like the a member would not probably like the quality of the resort they will get under RCI. So it is very difficult. As in, given a choice, company would want to have more of its own resorts than the RCI one for their members.
Right. Okay. So next question is from. Okay, I can't read his name exactly. He says that, did MHRIL purposely revalue its properties to increase revaluation reserves and have positive reserves and surplus, or was it due to the change in the standards?
Whatever they did, revaluation reserve can never be used for paying dividend or doing buyback. That is a accounting rule. That is one. And plus, the new accounting rule has also come up with where you have to, from time to time, you have to revalue a property and carry it on the balance sheet. You have the option of that, doing that. So that is where they have done that. So revaluation may appear there, but you cannot use that revaluation reserve to pay a dividend or do buyback. It has to be through general reserve only.
Okay. Okay. So next question is, what is the trend of EMI paying customers? Any impact due to COVID, and where exactly can we check that?
Can I share my screen? I'll just show because
yeah, I'll give you the presenter.
Yeah, Ankit bhai, just one.
Yeah, I have made you the presenter. You can present now.
So now I think I'm again forgetting the name of the person who asked that question, whether screener is useful or not. I'm just using screener for this. So we are not saying anything against screener.
It's Mr. Chandrakant was asking, can we rely on screener data?
Where do I have the option to share?
At the bottom,
Ankit bhai,
you
it's
see it.
at the bottom. It's at the right of start video.
I think I don't have that right?
No, I've made you the presenter. You have the right, actually.
Okay.
Otherwise, what we can do is I can share my screen and you can directly
Yeah.
tell
You can
me what
just
to do.
you can just go to the screener and
All right, I'll
type
do that.
Club Mahindra.
Okay,
Club Mahindra. I'll just show one
I'll
slide
do
there.
that. Okay.
Yeah, just type
So,
Club Mahindra and go down. Go down.
yeah, I'm
There
on
is
Club Mahindra. On balance sheet?
go down. Yeah, go down. You go to the presentation, as in go down, go
Okay.
further
Yeah.
down. Yeah, over here you'll see there's announcement under Regulation 30 Investor Presentation 8th May. The third line. Yeah. And just go to the slide 31, I guess. It would be 31 here. Slide 31 or 32. Yeah, just this
Okay.
one. If you can, I hope everyone can see this, right?
Yeah, I hope so.
So this is where you can get an idea about the EMI members, right? So earlier, specifically between 2011 and 12, 13, 14, prior to Kavinder Singh becoming the CEO, the previous management was very aggressive with the new member addition, and they went out and sold a lot of membership through this EMI route. And as I said in the presentation, they realized later that this is not the right thing to do because you are not getting the quality customers you want for your business. So ever since that, they are trying to reevaluate, and they took a hit in FY19 as well, and that is what they have done in FY21 also, wherein they have realized that these are the members who are not the high quality members. So it is better off taking them out and focusing more on the quality members. So even though they got 10,000 new members, around 10,000 new members this year, they cancelled 14,782 members. So that is where you see membership going down this year. I hope that could answer the question.
Right. And I think we can add this to the follow list, and any announcement they'll make over here, that will come in your email. So okay. So we'll just take next question. Okay, next question is a little bit longer. I'll just read it to you, and you can let me know if I need to reread it. So somebody says that if you say 1.5 crore to be the value of one room, assuming 5,000 rupees per rent and assuming a 20% F&B income with a 60% standard utilization and annual income of 13 lakhs, which is less than 10% ROE. If we assume minimum required ROE of 15%, is it prudent enough to take the value of one room to be 1.5 crores? What I'll do is I'll send this exact question in the chat box and you can also read it.
No, I am reading it. I'm reading it just
Okay.
now. Just a second. So first of all, I couldn't understand why 20% F&B income. What was the logic of taking 20% F&B income? So if you are paying 5,000 per day for a room, okay, I'll just tell you one thing. Your F&B income may be even more than 20% and sometimes even less than F&B that. So 20% is something which I don't understand, right? And second is with 60% standard utilization capacity, annual yield is 13 lakh, which is less than 10% ROE. If we assume minimum, you are calculating, so 1.5 crore is the cost, and you are saying 5,000 per day, okay, which is less than 10. If we assume minimum required ROE, is it prudent to assume the value of one room as 1.5 crore? So 1.5 crore is not the value of the room, it is the cost. Okay, the cost. So when we talk about replacement value, we talk about how much to be invested in making in creating one room. So that is the cost. And then when you're talking about 10% ROE, what you are not calculating probably is that room is going to stay with me for a longer period of time and is available. And you take that for a longer period, right? Even if a member leaves us after 25 years, you can sell that at a much higher rate, inflation adjusted rate later on. So that is, and it is difficult to come with a proper ROE number, at least for me. But the value of the business we have to take for a longer period of time rather than just how much. And the capacity utilization also you have taken 60%, and your load is 13 lakh. I think it is a little maybe Ankur is the person who asked this question. I'll try to, if you can just share your email or something, I'll try to work on it and give you a proper reply on the email. Is there a way of copying the question so that we get it?
Yeah,
after the event?
I have all the question. I'll have it.
Yeah. So Ankur, thank you so much for asking such a good
I have
question.
noted down
Let me
his
think
email
over it
address.
and I'll reply to you. Yeah.
Okay.
We'll make a note of all the questions. Ankit, don't worry.
Okay. So
I think
somebody
Ankur has asked other question. Ankur has asked other question also. What should be the securitization value of these debtors? Securitization value, as management say, is that they can get somewhere between 2 to 5%, as in the value would be less than 2 to 5%. So if it is 1200 crore, you get somewhere around, how much is 5% of 1200? It would be around 60 crores. So they get something like that. So 2 to 5% is what the management has indicated in their con calls. We have not verified that. Mike, and then if not, then can banks sue these debtors if they do not pay? If not, then there is hardly any value there. Yeah, this is a good point. This is a very good point. So bank can actually, it is a pass through. So bank can actually sue these debtors if they do not pay. That is what the management has conveyed in their communication. My question is that how customer to room ratio low is good, as in the case the customer are low and room is more, so it can hit the profitability. Yeah. So when I say customer to room ratio should be lower, I don't mean to say that it should go down to say 10, 15, 20 or 25. It was at one point of time even higher than 75. It is currently at around 60. So maybe somewhere between 45 to 60 is a good range to be in. But you are perfectly right that if it keeps on going down, then I think it is asked by Aman. Okay. So if it keeps on going down, that is a bad sign. Yeah. So they don't. So they want a mix or a balance of asset and customer. It can never be only asset or only customer. That is the problem in the last 10, 15 years. They have been able to get customers, but they have not been able to deploy enough amount, or they have not deployed enough amount in the asset. So now they have to balance that by investing more in the asset so that the customer experience becomes better. Abhimanyu, next question.
Okay, right. I think there are some questions before also. So one question was regarding the re-rating. I think they say that the 2,800 market cap and the 900 crore cash plus 1,200 crore receivables is quite cheap. The business is quite cheaply valued, but it has been the same thing since the past 8 to 10 years. So what exactly could be the more triggers for you to get a re-rating? I think you mentioned already some.
We have mentioned a couple of those are the two big triggers we think. Apart from that, we do not have any other things.
Okay, I think they can just go over to the presentation again and they can see those.
Yeah. So I'll just repeat those two triggers. Number one is if they get this inventory and membership ratio right, wherein they've been able to be ready with the supply of rooms, because the biggest negative for Club Mahindra has been in the period or in the season where there is huge demand, they are unable to supply room to even their best of investors, best of members. So that is where, if they, as they have mentioned, that they will be investing in 1200 to 1500 crore in their room, in creating more rooms. That should show up. If that happens, that is a re-rating. That could be a huge re-rating thing. Second, if they get out of, ideally we would want them to get out of HCRO, even if they have to take a haircut, or they manage it at least operationally well, there where it starts producing more cash flow. So these two are big re-rating, sizable re-rating. And the reason for the stock to not do well, one of the reason is the customer dissatisfaction and this the capital misallocation. These two would be the reason for the stock to not do well. But again, we can only discuss. We don't know the exact reason. We all can only speculate. Yeah.
So Mr. Sanjay is asking, can you please give some more details about HCRO acquisition?
So HCRO acquisition happened somewhere between 2014 or 15. They first acquired a majority stake, and then they kept on increasing that stake and bought the whole company. The earlier version was that with this we now have a strong foothold in the export market, as in the foreign market as well, and we are now the largest vacation ownership company outside of US. But they were probably pretty overconfident that they'll be able to turn it around very soon, and they had some cash on the balance sheet, and they got a good debt deal also, wherein their standalone business was not too much perturbed by what would be happening in HCRO, and they thought that they are getting a good good property where they can probably scale it up. But that never happened. And as we discussed in the presentation also, that decision at the start only didn't make sense, because you can't convince your Indian customer to spend their Club Mahindra holidays weekly points on traveling to a place like Finland. So that is it.
Okay. So if there are any other questions regarding, so Mr. Akesh has it. Can we assume that ROE, ROCE can be good metrics to analyze this type of company? You can take a break. That's okay.
No, that's fine. That's fine. So you can. So the ROE, ROCE is when you calculate return on equity or return on ROCE. So there, it is an accounting number. Okay. So you have to rely on what is there on the profit and loss account. So ROE is basically paid by your total equity, right? And similarly, the same thing, different version is in case of ROC. So ROE will never give you a right indicator over here immediately, because there has been a lot of changes in the last 10 years. So right now, it is not reflecting in the and one big factor which will again will suppress the ROE probably is the high deferred revenue. Because of the high deferred revenue, your book value will always be, the accounting book value will always be lesser than your economic book value. Let me explain it. I think I forgot to explain that clearly in the presentation. When a 5,000 crore deferred revenue sits on your book as a liability, your book value is basically getting reduced by that 5,000 crore, because that is the nature of accounts, right? But your actual book value would not be so less. Why? Because that 5,000 crore is not a liability which you have to pay someone. It is just, so it is not like आपके supplier को आपको पैसा देना है and you have not yet paid, so that is where it is standing. You will have to pay it. It is a customer advance which you have got, wherein your customer has no chance to reclaim that money. That money is with you, right? The only changes happen, the only adjustment happen, or where cancellation happen, or this amount will reduce when an EMI paying customer leaves the company. So if you'll see the presentation of Q4, you'll see whatever changes they have done in the hit they have taken in the deferred revenue, but that has been minimal compared to the average size of the deferred revenue. So I hope I could. It's a little technical. The accounting book value and the economic book value. Professor Sanjay Bakshi has written a lot of blog posts on this concept. Warren Buffett has written that in many of his letters. We can go back to that and then look at this. So the whole concept is that 5,000 crore as an accounting entry sits as a liability, but from the economic point of view, that is not a liability of the company. The company doesn't need to pay that to anyone. So that is where ROE and ROC probably will never give you the true indicator, the accounting ROE and ROC. And I am not very good, I will be very honest here, I am not very good at calculating the economic ROE, but let me try and see if I'll be able to do that. I'll share that with everyone.
Okay. So, Ankit bhai, you can take a break. I think we don't have many questions.
I don't need a break. We are ready to take up as many questions as possible whenever. Yeah.
Okay, so Mr. I think we'll take a couple of questions more. I'm not seeing many questions. So Mr. Rajesh has a question. He says that I have mentioned, not he mentioned, in the recent presentation, MHRIL have mentioned that rupees 1,205 crore receivables available for securitization. Please elaborate on this.
Sorry, I didn't get the question. Can you?
Okay, he says that in the recent presentation, they have mentioned that rupees 1,205 crores receivables are available for securitization. Can you elaborate on this?
So as I mentioned in the presentation, that this 1,200 crore is basically their receivables, and these receivables are the money which they want, as in their customers who are EMI customers who have not paid the full amount, they are due to pay this amount, right? And because they have the contract with them and the membership has sold, and they can anytime securitize this money with any bank or financial institution if they are in need of any funds. They are not doing it right now because they don't need that money, but it is available for securitization. Say, just hypothetically speaking, if they need, say, about 2,000 crore or 2,000 crore expansion, if they come up with this, something like this. I'm not saying they will come up with this, but I'm saying just, and they have around 1,000 crore today, 940 crores in their balance sheet. They can securitize this amount and easily raise more cash if required. So they are just trying to highlight the liquidity strength of the company. It's nothing more than that. That's it.
Okay. All right. Ankit bhai, there's a very it's a bigger question. I think you should take it directly from the chat box. It's from Mr. Varun. He says, economically, how does it fit? So and so. Are you able
economically,
to see?
how? Yeah. Economically, how does it fit from a new young rational member perspective? One would at least need to spend 4.5 lakhs to get decent privileges, and if we impute notional, see, I get the main from economic. I'm not going into the detail, but I can get your point. I would recommend you to read books of Rory Sutherland. So he makes a very important point that humans don't work on logic, but they work on magic. So you would be surprised to know many of these membership are sold through some sort of a psychological play wherein you are called in a very good environment where people, past members or some other members, will talk about their good time with the resort, and you will have a very good time having dinner over there. They will give you free iPhone, free cruise trip, and then that is how psychologically we are bent. So from the economic standpoint, I completely take your point. I've not got into the details, but so I'm not a member of Club Mahindra, just to make this thing clear, because I personally also feel that I would like to have more options right now, right? But that doesn't mean that there will be no takers. That doesn't mean that there will be no one who would like to. I would probably not mind paying for it membership. Maybe when my discretionary income is so high that I don't mind paying, say, 4 lakh or 4 lakh or 5 lakh. Right now, I don't have that kind of a discretionary income lying just like that I can spend on that. But that is how things are done, and their target audience are probably not just not middle class for sure. It is more than middle class, a little higher at least. So that is the group which they are targeting right now, and that is how things are sold. You get in a country where we don't understand financial literacy, and we don't understand financial terms. So many insurance and mutual fund policies are sold. Do you think all the policy holders and mutual fund holders have any idea what are the rules? So that is how this kind of a product are also sold, because it is more on the it works more on the emotion side, where you think that, and again, आपके neighbor के पास ये है, and you think that you are also from the network side, you are equal than your neighbor. It also works in that way. He has that membership, I should also try to have that membership, so that I can show it to him that, okay, I am now also. That is also something which is an emotional thing, which is not logical, but it happens in real life. So I would recommend, if you have not, maybe you would have already read, read Rory Sutherland's book. I'm forgetting the name, Alchemy. Read his book, Alchemy. You will get a lot of ideas from there. I hope I could answer your question, Varun, and I agree with you. Economically, it doesn't make sense for anyone. But that doesn't mean that there will be no new members.
I think that was beautifully answered. Makes a lot of sense. Okay, I think we only have one or two more questions. Another question from Mr. Krishnan. I think that also you should take from the chat box. It is also slightly big. He says, what is your view on market perception of Mahindra Group? There seems to be less than positive perception.
But you look at how M&M has performed over the last 1 year. So that has done well.
I think he may be asking about the other M&M group companies.
It's a huge group. There are so many companies with different dynamics. So it's very difficult to comment on each of them. But if you take M&M share price for any indication, it has done well. Even though we are not recommending any buy on M&M, because that is a different business altogether. So that's pretty much about it. And in fact, Anish Shah has been looked at with a lot of positive expectation in the market. That is what I believe, because he has a track record of good capital allocation, and he's being perceived as a very good capital allocator. And that is where, in fact, in one of the con calls, I don't remember correctly, maybe Q4 FY20 or Q1 FY21, one of those con calls, Kavinder Singh, in one of the queries which we asked on the con call, he replied that now we have got a mandate. So that is something which, this is a phrase he never used in the last 4 or 5 years of his tenure as a CEO. So that itself shows that when the management see, even though the company projects that we have given Kavinder the full right to do whatever he wants, but it is a board run company wherein the board will take the decision how to control cash. So maybe this aggressive investment in capex, it is just our assumption. We may be right, we may be wrong. It may be because of Anish Shah coming into the scheme of things, and he would have, if you will see, in last year, there was a Motilal Oswal conference where he had there is a detailed interview of Anish Shah, where he very clearly said what are his priorities. And at least in M&M, we see that that is happening. He said that, I'm forgetting the name of the business, Sangyong, right? That was a cash guzzling business where they were losing a lot of money, and now they are selling it off, right? So same thing can happen, is probably happening in Mahindra Holiday, where they never invested in room so heavily. so aggressively, which they are now claiming. This 12,000 or 1,200 crore capex that they could have done, they could have decided on in 2 years back, 3 years back, at the time when they did that HCRO acquisition, but they never did that. So probably the change of board also had a play on this. So that is what I can say about M&M and Anisha.
Okay. Uh, Okay, I think we'll just ask this to one question. This is from Mr. Sameer. He says, "Sir, if the company is focusing on strategy to improve quality of customers and reducing EMI-based type of customers, doesn't it reduce the chance of attracting millennials also who?" Okay, this question has already been taken up. I think we can avoid this. Okay, I think we'll take this last question from Mr. Avdoot. He says, "Ankit Bhai, have always liked your valuation metrics. Would like to know how did you evolve in this area? Any suggestions books to acquire the skill?"
Thank you so much, Avdut. Let me tell you that your assessment is probably not so right. In fact, if you'll see in our recent tweets also and in our recent blog posts, we as a company, we have been, we all are evolving. So, and we have missed a lot of multi-baggers in the last 10 years, both Akhilesh and myself. We discussed a lot of ideas, but we missed them. And we missed them only because we thought that the valuation was very high. In fact, our view on the valuation is still evolving. And at the current juncture, we as a company and a team, we believe that valuation is this is where most of us, including our team, we make a lot of mistake in underappreciating or undervaluing the quality of a business. I'm not talking about Club Mahindra here. It is just a general view I'm talking about. So it is far better to find good businesses, good management. And if it is possible for you, if you have a cash flow wherein you can invest on a regular basis, say month on month, that is a far better way of looking at investing in those businesses rather than focusing on price to earnings, price to book. There are many businesses which, so just to give you an example, we never bought, say, FMCG companies in 2013-14. There was one, I don't want to name it, but all the big guys, because we thought the valuation was very high. But look at the wealth they have generated from 2013 till 2021. So that was a big miss, right? And that was only because of valuation. So valuation is something, I think there are some really great investors who have a very good grip on valuation. They can do it much better than what we can do. But I think most of us fail wherein we try to only buy based on this is 5p stock or 10p stock, so let's buy it. And this is 50p stock. So 50p for any good company also, just to take, I'll not take any example. It will look like a recommendation. If any company is trading at say 35, 40p, and so the P is 35 or 40 based on the current earnings. If the company has a sustainable business where it can consistently increase its earning without taking debt, without diluting equity, and the management is someone whom you can trust, basing your entry decision only on P is not a good idea. In fact, we have been guilty of taking that decision or not buying great companies, but that is something which we are still on the path of, where we believe that it is better to take a rough view of valuation of valuing try to ask those questions. So just to take MHRIL example, we have no idea what is the total value of, what is a fair value of MHRIL. But what our assessment is at the current valuation, what it is trading at, it is probably trading at much below its replacement value. There are some good reasons why it is trading at below its replacement value. If it does something to improve or work on that, maybe it will trade at a much higher value, because there are some inherent strength in the business. So those are the qualitative questions we try to ask and try to find answer. Sometimes the answers are little clearer, like in case of Club Mahindra, we see the clarity is there. And in some of the businesses, sometimes the answers are not even clear, where we are not very sure whether the undervaluation is there or not. So we try to, in our model portfolio and also in our personal portfolio, we try to take a time-based entry. Like we will not take, will not buy anything with a high allocation today just because it's cheap in value or just because the company is really great. So the allocation is increased over a period of time. So we may lose out on if the price goes high, but we are fine with that. Overall, the portfolio does well. That is what we believe. I think it was a pretty long answer. I didn't have any short answer for that.
That's fine. That's fine. Okay, so I think we can end with that. There is one more question. From Mr. Ashlan. He says, how cost of room is calculated? Land comes under cost. Land cost comes under room.
Yeah, the cost of room is as per what management has indicated in one of the con calls, that 1.5 crore is what they spend. So land is, sometimes what happens is they have a mix of owned rooms, and so I'm talking only about the owned rooms right now. Okay, in case of owned rooms, the land will also be will be calculated, right? You bought the land or you bought the property, total property, and then you did the renovation to make it presentable to the customer. So all those costs are included.
Okay. I think with that we can end. Ankit bhai, we've already taken 2.5 hours from you. Thank you so much, Ankit bhai, for coming on the platform. It was
thank you so much, everyone.
Thank you, Ankit bhai. So I'll just end the recording now.
It was such a great pleasure to have you, and this was very intellectual.
Yeah, Ankit bhai, actually, you gave us 2.5 hours time.